145%. That's the tariff the United States just slammed on certain Chinese electric vehicles. Not to be outdone, China hit back with 125% on American auto parts. This isn't just a trade dispute. It's the fiercest economic standoff since the Great Depression. But now, in a quiet room in Switzerland, something strange is happening. For the first time in years, top U.S. and Chinese officials are sitting across from each other, talking. No press, no photo ops, just hushed conversations that could shift the entire global economy. And here's what no one's telling you, this sudden push for dialogue. It's not about making peace. It's about surviving. Because the tariffs are hurting both sides harder than they expected. And the first industry caught in the crossfire? Electric vehicles. EVs were supposed to be the future. Now, they're the first domino wobbling at the edge. May 7th, 2025. Out of nowhere, China agrees to sit down for talks. But don't mistake that for diplomacy. This move was triggered by something deeper. Pressure. From the inside. In the U.S., Trump's tariffs were supposed to protect American jobs. Instead, they're creating chaos. Ford's electric vehicle division, it just reported a massive $4.2 billion loss, blaming Chinese battery tariffs that sent their supply costs through the roof. Over in Germany, Tesla's Berlin Gigafactory slashed production by 30%. Why? Supply chain disruptions, again thanks to this tariff war. Even American farmers, many of them Trump's core supporters, are starting to revolt. Soybean exports to China have collapsed. And when rural America feels the pain, politicians listen. Treasury Secretary Besant didn't sugarcoat it. She said flat out, this isn't sustainable. But China's not celebrating either. Their EV giants like BYD and NIO are bleeding out. After Europe joined the tariff fight, their stock prices nosedived, 18% gone in a single week. What we're seeing isn't strength, it's mutual desperation. That's what's dragging both sides to the table. On camera, China's Commerce Ministry sounds tough. We will not compromise on our principled stances. But off camera, it's a different game. Behind the scenes, Beijing is floating a quiet offer, one with serious leverage rare earth minerals. These aren't just fancy rocks. They're the secret sauce in electric vehicles, especially the motors. And right now, 92% of the rare earths used in U.S. EVs come from Chinese-controlled supply chains. So here's the move. China might ease its export restrictions if the U.S. rolls back tariffs on Chinese electric cars. It's not a peace offering, it's a chess move. Because while China talks about fairness, they're racing to dominate the EV market globally. Take BYD, for example. They just launched a fully electric car for $12,000. And in places like Latin America, it's already sold out. This is economic judo, use your opponent's strength against them. And China's betting that price, not politics, will win the next phase of the EV war. Switzerland might look like neutral ground, but don't be fooled. It wasn't chosen for peace. It was chosen for cover. Behind those polished doors sit two very nervous teams. The U.S. Delegation, Treasury Secretary Besant and Trade Rep Greer. Their message, we don't want to decouple, we want to de-risk. Translation, keep buying and selling, but freeze China out of advanced tech, especially AI and quantum computing. On the other side, China's Vice Premier Haley Fun came with one clear demand. Stop the 200% EV tariff before it starts. Because if that goes through, it's game over for China's $150 billion EV export plan. But here's the twist. Neither side expects a breakthrough. This isn't a real negotiation. It's a warm-up. Talks about talks. What matters isn't what's said in Switzerland. It's what happens after the handshakes and photo ops. Because while cameras capture smiles, the real knives come out once the press leaves. Now toss in the wildest variable of all, the 2024 U.S. elections. Trump's team is cornered. If they drop the tariffs, they risk looking weak, especially to voters who want a hard stance on China. But if they keep the tariffs, the electric vehicle revolution slows down, fast. GM, Rivian, and other U.S. automakers are practically begging for cheaper Chinese batteries. Without them, costs skyrocket, and so do EV prices for American consumers. But China's not exactly riding high either. President Xi is under pressure too. Youth unemployment just hit a staggering 21%. That's millions of young people with no job, no income, and growing frustration. Xi needs a win, but can't afford to appear soft in front of his own party. So both sides are doing what politicians do best, spinning. In Washington, they'll frame any compromise as tough concessions. In Beijing, they'll claim it's a victory for multipolarism. Neither side wants to lose face. Meanwhile, the EV industry, they're stuck in the middle. Just last week, Tesla's stock jumped 8% on a rumor that the U.S. might loosen lithium import limits. That's how fragile this market is. One whisper, and billions move. This isn't diplomacy. This is poker, with the entire global auto industry in the pot. As Washington and Beijing square off, the rest of the world isn't standing still. They're quietly rewriting the rules of the global EV game. Let's start with Europe. Germany just inked a $7 billion deal with Chile for lithium, a core mineral in EV batteries. That's not a random partnership. It's a clear move to cut China out of the loop. Europe watched what happened to U.S. automakers choking on tariffs, and they're saying, never again. They want control over their batteries, their supply chains, and their future. It's not just about minerals, it's about freedom from dependency. Now, shift to India. Their government's launching China +1 subsidies, a mouthful, but here's what it means. If you're building EVs and avoiding Chinese suppliers, India will pay you to stay. They're turning this trade war into an opportunity to steal market share, especially from Chinese giants like BYD. And India isn't alone. Southeast Asia, Vietnam, even African nations are being courted with promises of infrastructure, minerals, and factories. The battle for the EV future isn't just East versus West, it's everyone versus uncertainty. Then there's Taiwan. TSMC, the world's most advanced chip maker, isn't waiting for a supply shock. They're already stockpiling cobalt like it's gold. Because they know the next disruption won't come with a warning. It'll hit overnight, and whoever's prepared wins. This is the quiet part of the war. No loud threats, no headline-grabbing tariffs. Just nations racing to insulate themselves, to be less dependent, more resilient, and ready for a world where alliances, not just economics, dictate who gets what. The EV supply chain is fracturing fast. We're watching a global split take shape. On one side, the U.S. and its allies building clean networks with trusted partners. On the other, China pushing Belt and Road 2.0, faster, cheaper, and still heavily in control. This isn't just a race for electric cars. It's a race for energy dominance, transportation control, and geopolitical leverage. Whoever wins gets more than just market share. They get the steering wheel to the 21st century economy. And everyone knows it. So is this the end of the trade war? Not even close. This is just a pause, a truce before the next storm. What we're seeing is the beginning of something deeper and far more dangerous, a fractured global economy, where every nation is forced to pick a side. Just like the Cold War, but instead of nukes and ideology, it's about chips, batteries, and critical minerals. And the electric vehicle industry, that's the canary in the coal mine. Because when Tesla starts sourcing batteries from Vietnam instead of Shanghai, or when Ford announces its next plant in Poland, not China, you'll know the decoupling is real. These aren't business decisions. They're geopolitical moves, dressed up in corporate language. But here's the twist. China isn't sitting still either. They're already flooding Mexico with ultra-cheap EVs, an attempt to slip past tariffs by exploiting North American trade rules. It's clever, it's aggressive, and it signals that this trade war isn't cooling down. It's entering round 2. The truth is, the age of globalization is over. The idea that the world can stay connected through smooth trade and open markets, that dream is unraveling. What comes next will be messier, riskier, and shaped by national interests, not global cooperation. So if you think this doesn't affect you, take a look at your garage. Check your car's VIN. If the number starts with L, that's China. If it's a 3, that's Mexico. If it's a 1, you've got American roots. The trade war isn't just on the news, it's in your driveway. Drop a comment below. Should the U.S. cut a deal with China or double down on tariffs? Smash the like button if you want a deep dive on how this hits your wallet. And don't forget to subscribe, because trust me, the next move drops sooner than you think.